Do you have a ETH, Bitcoin, crypto price prediction for 2023?
I'm so wary now of doing that.
I know. I so love that you have been willing to give them in the past. And
so
if you're wrong,
this is how I'm framing it this time around. So 2018 was the last time the Federal Reserve stopped raising rates. They didn't cut until, I think it was August 2019. So what happened was the moment the Fed went on hold, the markets went on an upside rampage. They were down kind of 30% and then they recovered, so not wildly dissimilar to now. And if I look out over the next year, well, the S&P did about 10%, the NASDAQ did about 14%, kind of those growthy tech stocks, the kind of ARK style stuff, they did about 18%. So that was good. Bitcoin did 100%. And that's after it had gone up 400% and corrected. So, and even that didn't take back the all-time high. It took the following year for the all-time high to take out. So I think it's going to be a positive year, but that kind of choppy year where one minute you think, oh my God, it's going straight to the high. Then it's like, oh my God, it's gone back down. We're all going to die. And then it stabilizes. And it's generally, I think we'll look back and go, okay, we survived and we've actually made some money again, or made some money back. Let's put it that way.
Bitcoin is currently in a bearish trend, with prices dropping to the $23,094.90 range. This downturn has been ongoing since the bears took control and shifted the market in their favor, but the bulls are still showing some strength and have established a support level at $22,908. They have also set a resistance level at $23,417. But if the bears manage to break through this obstacle, there may be further price declines. In the price yesterday, the bulls drove the price up to $23,400, and it is unlikely to see any further increases as the bears have a firm grip on the market. On the other hand, the world's second largest cryptocurrency is showing a positive trend as it continues to hold above $1,500. The price has been on an uptrend as it has remained above a key support level. Overall, the market rally is slowing down and it's currently trading at $1,583.78, a 3.33% increase in the last few days. Before we listen to Raoul Pal, if you're not subscribed, consider hitting the subscribe button as we put out daily content to keep you updated on the current market.
Might be a more complicated year, but I don't think it's going to be that complicated. So macros, everyone suddenly learned, as they have to understand what macro is, because crypto got sideswiped by macro. They're like, what's all this interest rate shit? And it's now why you care.
Like the merge was supposed to make it pump. What happened? And it's like, well, the world collapsed.
So, look, the world is driven, this whole space is driven by liquidity and network adoption. So the adoption of blockchain technology is ongoing and relentless, but the liquidity of how much money's around drives the space. Last year was a massive withdrawal of liquidity. All the money came out, the central banks were tightening rates, all the banks stopped lending money, all of that stuff, and it meant that all assets went down. Crypto goes down the most because it's the kind of longest duration, highest risk asset. So where are we now? So here we are right near the end of the rate hikes. The economy is probably going into recession and pretty soon. And so what happens is the market starts to look forward and say, maybe they'll stop tightening liquidity and take the foot off our necks. And maybe things, because our job in financial markets, particularly in macro, is to live in the future. Looking around today is useless. But looking around, what is the world going to look like in 6 months' time? Are the Fed raising rates in 6 months' time? Almost a 0% chance. Because inflation has peaked, growth is falling, we're going into recession. Normally, they would cut rates at that point. Now, they might be a little bit slow to do that because they really, really want to see inflation lower. But it means that the rate of change of all these rate hikes and all this bad news starts slowing down. Meanwhile, China's been leading this. The Chinese economy seems to be a year ahead of everybody else's right now. And they started some stimulus process before their lockdowns, and now they've really started to stimulate because, they'd shut down their economy. So we're already seeing this global money supply, and people can see me post this on Twitter from time to time, global money supply year on year and Bitcoin price year on year, they mirror each other. So when liquidity starts to come back in the system, prices start to rise again. So we're at that point, which is why I've been really interested. So in crypto, we've seen that I thought June was the low, and it was in ETH, some stuff, other stuff, no. But the point being is we've thrown the worst possible news. Prices kind of stopped going down. And now we're starting to see liquidity when everybody else is saying, can't you see, you idiots, you're going into recession. How can you own JPEGs when you go into a recession? The point being is our job is to look a little bit further into the future. There's certain things going on. One is that things like retail sales are driven by the total amount of volume of goods. Now, because prices have gone up a lot, the volume can have gone down and it still looks like, hey, presto, everything's okay. But it's not. Everyone's selling less stuff. So there's these weird things around inflation that we've not had to deal with. And unemployment's a bit sticky, but GDP growth is still, by last measure, still positive. We had a couple of scares, a scare earlier last summer. But for me and my forward-looking indicators, it looks like it's all about to collapse. That's growth is going to collapse. Now, the markets might get a bit unnerved by that, but again, usually they should look forwards.
Is there a decade you would compare this particular recession, this particular era to in history?
Yeah, most people want to go back to the 1970s because that was the ghost of the baby boomers past, right? Right, that kind of weird inflation went down, then went up, then went down, then went up, was, I think, a demographic phenomenon by these baby boomers, right? They all came into the workforce at the same time. They're all about 30 years old when that happened, and they all started, they were in their 20s and 30s, and they all started consuming stuff. It was the largest population bulge in all history. I think the actual best comparison is post-World War II. Now, we're going back a long way here, but why World War II? So the pandemic shut everybody out of the workforce, and factories couldn't produce goods any longer. So we have this supply issue, and everyone came back out and went, I want to buy stuff. I've been locked in my house for so long. World War II was that, but bigger. And so what happened is all the factories were making munitions, and now they had to suddenly spin up and make washing machines, and it took them ages to get everything sorted out, and supply chains were broken, and the ships were all blown up, and all of that stuff. But people came in and they wanted to buy stuff. They had some optimism again, and prices rose 20%.
I hope you future millionaires enjoy this video. If so, please subscribe and hit the like button as we post weekly content similar like this to keep you up to date with the market.